Hi, David Bassanis here, Chief Economist at BetaShares. This is a snapshot of my market outlook report for the month of August. And I think the outlook is still pretty encouraging. Key developments through July were firstly the US continuing with trade deals. Donald Trump negotiated a deal with both Japan and Europe for a 15% tariff on both countries. And importantly, these countries are promising to invest into the US economy billions of dollars and not retaliating with tariffs of their own. So all up, that looks like a pretty good deal for the United States. And I think many countries now are just rolling over and prepared to accept tariffs just for the sake of getting this whole tariff saga behind us. So that looks a pretty encouraging development. Also, the US June quarter earnings reporting season, we're still going through it at the moment, but so far at least the reports still look pretty good. The tech companies in general are still producing pretty good earnings. The US economy, the economic data is still holding up as well, so that's another encouraging sign. In terms of Australia, we've had a sort of on again, off again in terms of optimism here. Firstly, there was disappointment that the Reserve Bank did not cut interest rates at the July meeting, as the markets and many economists did anticipate. But then we got a pretty good June quarter CPI, which I always thought the RBA would be holding out for before they decided whether or not to cut rates. And it turned out that June quarter report was pretty good. Underlying inflation coming down to 2.7% from 2.9%, which to me, now makes the case for a cut at the August meeting pretty much a done deal. And the markets and many economists are also have swung round to that view. So there was initial disappointment, but now I think, rate cut from the RBA is back on the table. Now, what does all this mean for markets? Well, equity markets continued to grind higher over July. We had the MSCI All Country World Index returning 2.2%. The Australian market, pretty much similar return, or at just over 2%. Bond yields were lifted a little, but they're still broadly in their sideways range they've been in for the past few months. So it's still a fairly neutral influence on equity markets from the bond yield perspective. We also saw the US dollar strengthen a little and the Australian dollar weaken a little. So the trend decline we're seeing in the US dollar so far this year, at least temporarily, maybe could be coming to an end as optimism around the US tariff policy improves. But all up, I think it was another encouraging month. And as Donald Trump progresses through with his trade deals, I think the outlook remains at this stage pretty encouraging for equity markets for the remainder of the year. Look, that's pretty much it for now. If you'd like to see full details of my report, please visit the Insights section of our website. Thanks for watching, and I'll see you again next month.